Welcome to the deep dive. We're plunging headfirst into, well, just this vast ocean of information out there. Our goal today is to bring you the insights you really need to stay truly well informed. And today, we're not just dipping our toes in, we're navigating what feels like a huge deluge of data. It's everywhere. I mean, imagine trying to make sense of everything from, say, the intricate details of global poverty statistics to the latest really big shifts in public health policy, and then pivoting completely to the lightning-fast world of cryptocurrency trends all at once. It feels like a monumental task, right? For many, I think it can feel utterly overwhelming, like trying to drink from a fire hose.
It really is. The sheer volume and just the speed of it all, it's immense. And the challenge isn't just getting the information, it's figuring out what actually matters. So our mission today is to cut through that noise for you, sort of act as your guides. We're going to pull out the most important nuggets of knowledge from a whole stack of diverse sources. We've got foundational World Bank reports, a really critical discussion on U.S. public health policy from a Council on Foreign Relations webinar, and some in-depth analyses of the, let's say, dynamic crypto market. We'll try to connect the dots between these areas that seem distinct, but actually they're deeply linked. We want to show how collecting data, analyzing it, interpreting it, or sometimes the lack of data directly impacts all our lives in really profound ways.
Absolutely. And we'll explore how this plays out across the board, from the meticulous monitoring of disease outbreaks, the stuff that protects our communities, to understanding those deep economic disparities affecting billions, and then all the way to the complex, sometimes thrilling world of making investment decisions in this rapidly evolving digital landscape. Ultimately, it really is all about the power of information and how it fundamentally shapes our understanding of global well-being, economic realities, and, well, the very future of finance. So let's not delay. Let's unpack this. Okay, our first stop on this deep dive takes us to the really foundational work of the World Bank. It kind of acts as a global economic barometer, right? And specifically, their perspective on poverty and progress. This is an institution with a singular huge mission, working for a world free of poverty. It's a mission that, when you really think about the scale of global challenges, it immediately highlights the urgent need for accurate global data. Comprehensive data. I mean, just think about the stark reality that non-communicable diseases cause 70% of global deaths. That's not just a health statistic. It's deeply economic, too. It often traps people, families, in cycles of poverty. It really highlights that urgent link between health and wealth globally. It absolutely does. And it shows how interconnected all these issues really are. To even begin to tackle huge challenges like widespread poverty or the impact of those non-communicable diseases, the World Bank relies on incredibly sophisticated tools to measure economic realities across the globe. And one of the most important of these is the International Comparison Program, or ICP, and the purchasing power parities, or PPPs, that this program produces. Now, these are, they're much more than just dry academic terms. They're really the bedrock upon which our understanding of global economic well-being is built. Okay, these terms, ICP and PPPs, they do sound quite academic, maybe a bit daunting. Can you break them down for us, make their practical relevance clear? And maybe crucially, why should I, as a listener, really care about how they're calculated? What's their real impact?
That's a crucial question. So the ICP, it's essentially a massive, ongoing global statistical initiative. Think of it like a huge coordinated effort. Countries all over the world participate. They collect meticulously detailed price data, thousands of identical goods and services, everything from, the cost of a loaf of bread, a haircut, a doctor's visit, even machinery. Then they compile expenditure data on GDP. And the ultimate goal is to produce these purchasing power parities. PPPs. Now, PPPs are not your typical market exchange rates, not what you see on Google or at the airport currency exchange. No, instead, they're currency conversion factors. They adjust for the vast differences in price levels between countries. And this adjustment allows for a much more accurate, more meaningful comparison of economic statistics like GDP, because it reflects the actual purchasing power of currencies in different economies.
Okay, so it's not just about how many dollars or euros you have on paper, but what those dollars or euros can actually buy in different places. I remember seeing an OECD insight that used a great analogy for this. It really clicked for me. They suggested thinking of it like comparing the cost of a Big Mac across different countries.
Right, the Big Mac index, yeah.
Exactly.
Yeah.
So it might cost, say, $5 in one country and the equivalent of $3 in another. But your $5 might actually buy more local stuff in the second country, even if the official exchange rate doesn't show that, that really puts into perspective how far your dollar actually goes.
That's a perfect analogy, and it's precisely why these metrics matter to you, to everyone, in very tangible ways. For instance, PPPs are absolutely crucial for an adjustment to global poverty lines.
Mm.
The World Bank defines these international poverty lines, right? Like the extreme poverty line, currently $2.15 a day, or the lower middle income line of $3.65 a day. These lines are set in US dollars, but when they're applied globally, they need to reflect what that amount of money can actually purchase in a local economy. So understanding how do the 2017 PPPs change our understanding of global and regional poverty? Well, that directly impacts how we define and track the well-being of hundreds of millions, maybe billions of people. Without PPPs, we might drastically overestimate poverty in some places or underestimate it in others. That could lead to misdirected aid or policies that just don't work. They ensure we're comparing apples to apples, not just numbers on a page.
And it goes beyond just defining those poverty lines too, doesn't it? It ties into much larger sort of aspirational global goals that need precise measurement.
Precisely. Data from the ICP is fundamental for monitoring progress towards the Sustainable Development Goals, the SDGs. For example, it directly informs how we track SDG 10.2.1.
Cool. What does that specific goal focus on?
So that goal isn't just about general inclusion. It explicitly focuses on promoting the social, economic, and political inclusion of all people, irrespective of age, sex, disability, race, ethnicity, origin, religion, economic status, anything.
So really getting granular.
Exactly. It means looking at whether specific marginalized groups, maybe indigenous communities, people with disabilities, migrants, are genuinely participating and benefiting from economic growth. It's not just about whether overall poverty numbers go down. By linking local prices and living standards to these global goals, we can measure if true equity and inclusion are actually being achieved across diverse populations. It's a much more nuanced picture of development.
That's incredibly powerful. It gives you a view that nominal data alone just couldn't provide. And these PVPs are also used to measure the sheer size of entire economies, right? Giving us a clearer, sometimes surprising picture of global economic shifts.
Indeed. They are indispensable for figuring out the true economic weight of nations and regions. For example, they help calculate the size of the Asia and the Pacific economy, giving a more accurate picture of its huge and growing influence. They offer deep insight into the economy in Western Asia, particularly focusing on the Arab economies, revealing their collective economic power when you adjust for local costs. And the ICP also provided the size of the world economy in 2019. That became a crucial baseline.
A baseline for what, exactly?
A baseline to measure the impact of COVID-19 and then to track the economic recovery afterwards. So when the World Bank analyzes the economic fallout from global events or projects' future growth, PPPs are core to that. They provide a much more robust, more comparable foundation than just using market exchange rates, which can swing wildly and often don't reflect domestic purchasing power at all.
It's fascinating how these huge macro-level statistics can actually shed light on everyday realities, too. I saw that they use PPPs to look at retail food prices, at purchasing power parity exchange rates. And the findings can be quite revealing, like that observation about the high price of healthy food and the low price of unhealthy food. That has enormous implications for public health, which we'll definitely get into later, but also for individual household budgets and long-term societal well-being.
Absolutely. The ICP data offers some very specific revelations. They paint a vivid picture of our changing world, and often it's counterintuitive. For example, tracking GDP in PTP terms shows rapid rise of China and India. This isn't just a small shift. These are significant generational rebalancings of global economic power. When you measure just in nominal terms, India might look like a much smaller economy than it really is in terms of what it produces and consumes domestically. And the data also reveals the striking fact that measuring India's economy using PPPs shows it surpassed France 25 years ago.
Wow, 25 years ago.
Yeah. That's a historical shift that might surprise a lot of people who only look at nominal GDP. It has profound implications for understanding global trade, investment flows, even geopolitical influence. It shows these nations have been economic powerhouses for far longer than some traditional metrics might suggest.
25 years. That's a huge difference in perception if we weren't using these adjusted metrics. It really changes our understanding of modern economic history. And when it comes to understanding poverty, the numbers, well, sadly, they're stark, aren't they? highlighting immense challenges.
They are. The ICP data highlights a critical concentration of poverty globally, and that's incredibly important for policy and aid allocation. It tells us that half of the world's poor live in just 5 countries. Now, the specific countries can shift a bit with each new data release, but the concentration remains.
That concentration must be key for targeting interventions, right, but also challenging.
Exactly. It allows for targeted interventions, which is good, but it also presents unique challenges for global aid organizations. They have to navigate complex political and logistical landscapes within those specific nations.
What kind of strategies do they typically use in those focused poverty zones?
Oh, it varies. Often it involves things like direct cash transfers, microfinance initiatives, big investments in basic services like health and education, always tailored to the specific regional context, ideally. Beyond that concentration, the data further emphasizes the sheer scale of global disparity. It reveals that nearly 1 in 2 in the world lives under $5.50 a day. These are figures that just underscore the immense challenge still ahead, and why precise measurement is so vital for interventions to be truly effective and targeted.
It also sounds like these metrics aren't set in stone. There's a continuous process of refinement involved. Our understanding is constantly evolving.
That's absolutely right. The World Bank acknowledges how complex global economic measurement is, and the need for constant improvement, constant adjustment. For instance, the 2011 PPPs have been revised. Why? Because new data becomes available, methodologies improve, economic structures within countries change. All these necessitate updates, and these revisions, they directly affect poverty estimates. It shows the dynamic nature of economic measurement and the institution's commitment to accuracy. It's an ongoing, highly detailed scientific effort to make sure the data is as robust and reflective of reality as possible.
So it's not just about the numbers themselves, but the ongoing rigorous effort behind them, making them as accurate as possible. And I know the World Bank also looks beyond just monetary measures of poverty. They recognize well-being is more than just income, right?
Exactly. They also actively discuss the concept of shared prosperity. It's a broader goal, maybe more challenging to measure, but incredibly important to monitor.
Shared prosperity. What does that entail
Yeah.
specifically?
It goes beyond just income levels or reducing extreme poverty. Shared prosperity looks at how the incomes of the bottom 40% of a country's population are growing. It's a recognition that development isn't just about reducing extreme poverty or boosting overall GDP. It's about ensuring that the benefits of economic growth are broadly shared across society, hitting the lower rungs of the ladder. It's harder to measure than simple income, sure, but it offers a far more complete picture of inclusive development. And on an ongoing basis, the World Bank updates its annual country classifications by income level. They just did it for 2024-2025. These classifications aren't just academic exercises. They influence aid eligibility, lending terms, development strategies for countries all over the globe.
And for all of us listening, maybe curious citizens, policymakers, investors who want to dig deeper into these insights and stay updated, how does the World Bank share all this information?
Well, many of these critical insights, the research findings, the updates, they're often shared through the World Bank blog. This platform acts as a really vital knowledge hub. Experts, researchers, they disseminate their analysis there. It makes complex economic data and its huge implications accessible to a wider audience, policymakers, academics, the general public. It's designed to translate highly technical information into insights you can actually digest, bridging that gap between complex economic models and practical understanding.
Fascinating stuff, truly. And a powerful reminder of how foundational data shapes our understanding of global well-being. So, from these broad economic indicators and the intricate work of institutions like the World Bank, we're now going to shift gears quite a bit. We're moving from the macro level to something much more intimate, much more immediate, the profound impact of public health policies and data on our communities, on individuals. Our journey into public health data starts with, well, a stark warning, the erosion of hard-won victories. Here's where it gets really interesting, I think. Connecting those global decisions to local realities, revealing the often invisible battles fought for us.
Indeed. Our sources, including that very revealing Council on Foreign Relations webinar from February 2025, they paint a concerning picture. They describe a time period of uncertainty and unrest for public health staff at the state and local levels across the U.S. And this isn't just general unease. It's largely due to specific, impactful shifts in federal policy. And those shifts are reverberating through the whole system, affecting everything from critical grant funding to essential communication channels, even personnel stability.
So state and local public health departments are basically feeling the ripple effects of these top-down federal changes, creating a climate of instability. What are some specific concrete examples of this uncertainty that we're seeing on the ground? How does it impact their real operational capacity?
Okay, let's take Connecticut as a tangible example because it was discussed in the webinar. The Connecticut Department of Public Health. It receives an astonishing 154 different grants, mostly from the federal government, spanning up to 17 different federal agencies.
Wow, 154 grants.
Yeah. Roughly half of the department's entire operational budget is funded through these federal dollars. Now, initially, as a new administration took hold, almost all of these grants received some sort of cease order, effectively putting a pause on crucial programs. There were even threats made to fire critical CDC employees like EIS officers, Epidemic Intelligence Service officers.
Like the disease detectives.
Exactly. Highly specialized public health detectives embedded in states. They're the frontline epidemiologists during outbreaks. Now, while temporary restraining orders have since been put in place and as of early 2025, no specific grants had been permanently terminated or reduced, nor had the EIS officers been fired, this whole period created significant uncertainty. Uncertainty about future funding, about the very operational capacity of state and local health departments. I mean, imagine if a major corporation suddenly had half its budget frozen and its top technical talent threatened with dismissal.
Yeah, catastrophic.
The impact on planning, morale, sustained efforts, it would be huge. We're seeing a similar, maybe even more critical situation unfold in public health.
That sounds incredibly disruptive for planning, for sustained efforts, especially when rapid response is so critical in public health. What about the direct impact on fundamental programs, particularly something as critical and historically successful as vaccination? Are we seeing an undoing of that progress?
That's precisely the concern. Let's look at the alarming erosion of vaccination support. It's really important to remember that measles, for example, was officially eliminated from the United States back in 2000.
A huge achievement.
Monumental public health triumph, a direct result of decades of concerted effort and incredibly high vaccination rates. Typically around 93 to 95% MMR coverage, measles, mumps, rubella. That threshold is what gives us herd immunity, right? If enough people are vaccinated, it protects the vulnerable who can't be. It effectively stops the disease from circulating. It's a testament to the power of collective public health action.
That's a powerful history of success. But the big question looming now is, are we seeing an undoing of that progress? Are current trends pointing to a reversal? And what are the consequences?
Alarmingly, yes. The data suggests a concerning reversal. As of early 2025, 31 states are below the lower band of that threshold of 93% for coverage for the MMR vaccine at the kindergarten level.
31 states, it's nearly two-thirds.
Yeah, it means nearly two-thirds of U.S. states are vulnerable. And the tragic immediate consequence of this trend was reported recently, the death of a child from measles in West Texas. This marks the first death from measles in the United States in 10 years. A grim milestone. This unvaccinated child was part of a rapidly growing outbreak. It's a stark reminder these aren't just statistics, these are lives.
That's absolutely heartbreaking, and just a stark reminder of what's at stake when these protections falter. What's the scale of this current outbreak beyond that single tragic case?
The numbers are indeed concerning. They paint a picture of rapid acceleration. Officials reported 124 cases in Texas, mostly West Texas, since late January, with 9 cases in the neighboring New Mexico County that shares a border with that affected Texas region. And a staggering 80% of these cases involve children, primarily in an area where local vaccination rates were known to be significantly low.
And it's spreading beyond Texas and New Mexico.
Yes. Cases have been reported in 7 other states: Alaska, California, Georgia, New Mexico, New Jersey, New York, and Rhode Island. The total number, just over 130 cases in the first 2 months of 2025 alone. That already exceeds the total number of cases seen in 8 of the last 15 years.
Wow.
This isn't just an isolated incident, it's a rapidly spreading threat.
That's a truly rapid and widespread acceleration. And how are federal policy actions contributing to this worrying trend? Is it just bureaucratic challenges, or does it reflect something more fundamental about how public health is valued federally?
It seems to be a combination, but it does signal a concerning shift in priorities and support. Several federal actions have had this cumulative diminishing effect on broader vaccination support. An executive order, for example, was issued restricting any federal funding to states or schools that required COVID-19 vaccination. Now, while that was specific to COVID, it created a kind of chilling effect. It signaled a broader lack of federal backing for vaccine mandates or strong public health directives.
Undermining the principle, perhaps?
Potentially, yeah. And key advisory committees like the National Vaccine Advisory Committee, the Advisory Commission on Childhood Vaccination, they've seen their meetings postponed or even canceled. That effectively silences expert voices and delays critical policy recommendations. There have also been questions raised about the credibility of ACIP, the Advisory Committee on Immunization Practice. Their findings influence compensation programs and public trust, so that's significant. And perhaps most tellingly, federal leadership has been notably silent. We didn't see the call for vaccination that you would ordinarily see, even when they had direct opportunities to speak on the measles outbreak.
A vacuum in messaging?
Exactly. This vacuum of federal support and communication is creating an environment where outbreaks could become worse than that 2019 New York measles outbreak, which saw over 1,000 cases and huge community disruption. So this isn't just bureaucratic. It feels like a strategic withdrawal of leadership and resources.
It really sounds like a perfect storm for preventable diseases to make a comeback, undoing decades of progress. Is there any good news? Any areas of resilience amidst this federal pulling back?
There is, actually, and it offers a crucial lesson. Connecticut, for instance, provides a contrasting example. Resilience and effective local action. Despite the national trends, despite the federal uncertainties, the state has maintained impressively high MMR vaccination rates. They reached 97.7% in 2024.
That's very high.
Yeah, it's actually above its pre-pandemic levels. For context, in 2014, their rate was 96.65%, dipped to 95.28% during the pandemic in 2020. So how do they do it? It's attributed to strong state leadership, consistent community engagement, and a sustained commitment to public health messaging. It demonstrates pretty unequivocally that strong local action, backed by community trust and clear communication, can mitigate broader national trends. It can effectively protect populations, even when federal support wavers.
That's a truly hopeful sign. It really showcases the power of local public health efforts, community engagement. But let's zoom out a bit again to the broader institutional capacity. Are we seeing a brain drain? A loss of critical expertise in key public health institutions that impacts our long-term ability to respond?
Unfortunately, yes. And this is perhaps one of the most insidious long-term consequences. At the National Institutes of Health, the NIH, an estimated number of 1,200 employees, most of them promising young investigators, have been dismissed. Beyond just the numbers, the qualitative loss here is immense. Many of these individuals possess specialized knowledge that can't easily be replaced. We're talking years, maybe decades, of specialized training, institutional memory in critical research areas, immunology, virology.
And the CDC.
The Centers for Disease Control and Prevention has also seen a reduction of around 1,100 individuals. About 400 took voluntary retirement, 750 were fired. There have been significant decreases in personnel in crucial linkage programs, like the Laboratory Leadership Service Program, the Public Health Associate Program. These programs are vital. They train the next generation of public health leaders. They ensure rapid, skilled deployment of staff to states and localities during outbreaks. Losing those EAS officers, for example, directly impacts our ability to detect and contain novel pathogens before they become widespread. They're the ones investigating unusual disease clusters on the ground.
And what about agencies like USAI? They play such a critical global role in preventing infections from reaching us, right? What's the impact there?
The cuts at USAID are particularly drastic and alarming. 5,800 out of 6,200 contracts terminated, and an expected workforce reduction from around 10,000 to 1,000.
1,000 down to 1,000. That's huge.
It's massive. USAID provides our eyes and ears with other countries in terms of emerging infections. They fund on-the-ground surveillance, build lab capacity, foster international collaborations, all vital for early detection. These cuts severely impact the U.S.'s ability to detect and respond to global health threats at their source. And the broader impact of all these reductions, NIH, CDC, USAID, is that we are, quote, eviscerating our next generation of public health experts and scientists. This is made even worse by academic funding cuts affecting graduate students, and even a proposed split of NIAO, the National Institute of Allergy and Infectious Diseases, which is the infectious disease research arm of NIH. Splitting it into 3 subgroups: infectious disease, immunology, autoimmune diseases.
Why is that problematic?
Well, infectious disease research isn't particularly lucrative to begin with compared to other medical fields. Measures like this create a profound chilling effect on the scientific pipeline. It deters bright young minds from pursuing careers that are critically important for global health security, but maybe don't have the big pharma payouts.
This sounds like it could have profound, even devastating implications for global health security. Not just domestically, but for the entire world. Like an unraveling of international cooperation.
It does. And the unraveling of global health coordination is another critical, immediate consequence. On the very first day in office, the U.S. withdrew from the World Health Organization, renewed a 2020 notice. Seemed like an immediate, decisive effect. This led directly to U.S. officials ceasing participation in vital global surveillance networks. Those networks are crucial for sharing real-time data on emerging threats.
And the financial hit to WHO must have been significant, too, given the U.S.'s historical role as a donor.
Indeed. The U.S. was historically the largest donor to WHO, representing around 16% of its overall budget. This withdrawal directly led to WHO having to halt international travel for most staff, drastically reducing its global reach, its ability to deploy experts to respond to health crises on the ground. This creates what public health experts call blind spots.
Blind spots.
Yeah, areas where emerging health threats can incubate and spread beyond our knowledge. It creates this illusion of safety that is deeply, deeply dangerous.
So if we pull back, who's going to track the next potential pandemic?
Yeah.
What happens if dangerous diseases like Ebola or hantavirus or some novel pathogen emerge again? We're putting the whole world at risk here.
That's the critical what-if scenario we face. Previous U.S. aid funding, for example, was responsible for the identification of the first COVID case outside of China. It also played a pivotal role in developing the Mpox vaccine. Losing this capacity puts us all at greater risk. We lose our early warning systems, our ability to rapidly develop countermeasures. And moreover, this action has global ripple effects. Some governments, Argentina, Hungary, Russia are mentioned, are reportedly considering emulating the U.S. withdrawal from WHO, further fragmenting global efforts. The U.K. has also decided to decrease its foreign aid to invest more in its military. That's a sovereign decision, of course, but it further reduces the collective pool of global health funding.
And China. Are they stepping into the gap?
Well, China might step in to fill some voids in strategic countries with infrastructure projects, perhaps. But their focus seems less on global health security in the way the West traditionally thinks about it. So the global health landscape is becoming increasingly complex and worryingly uncoordinated.
So when all is said and done, it really seems like local public health departments are left on the front lines, carrying an even heavier, often overwhelming burden without the federal support they've traditionally relied on.
That's precisely it. And it underscores a fundamental truth. Good old-fashioned public health is done at the local level. However, these states and localities profoundly rely on federal partners for expertise in areas that maybe we only interact with on a one-off basis.
Like what kind of expertise?
Oh, anything from tracking obscure diseases, complex lab analysis, intricate epidemiological modeling. The federal agencies provide the surge capacity and specialized knowledge that local departments simply cannot maintain on their own. It creates immense pressure on these often under-resourced local heroes.
It makes you realize just how much public health impacts our daily lives, even when we don't actively think about it. It's often this invisible safety net.
Exactly. As the saying goes, public health saved your life today, you just didn't know it. We're talking about fundamental protections most people take for granted, like safe drinking water regulations ensuring your tap water is free of contaminants, or rigorous food safety measures preventing listeria outbreaks in packaged foods.
Right.
Or the secret shoppers who regularly test restaurant food for safety, often without anyone knowing.
Right, the unsung heroes.
They really are. And for individuals listening, the message is clear. Lean into your state public health department for accurate, up-to-date information. Connect with local health departments to understand how to protect under-vaccinated populations in your own community. And engage in respectful, transparent conversations about vaccination based on scientific evidence. Research has repeatedly shown that social trust, how communities interact with one another, played an outsized role in the differences between outcomes during the pandemic. It just underscores the vital need for local, trusted voices to counter misinformation and foster collective action.
Wow. Okay. From the essential, often invisible, and increasingly challenged work of public health to the highly visible, incredibly fast-paced, and let's face it, often wild world of digital finance. Let's unpack this fascinating frontier now, where data is intrinsically tied to value, trust, and disruption. Cryptocurrency and digital assets. It's a completely different landscape driven by different forces, but still deeply rooted in the collection, analysis, interpretation of information.
That's a perfect transition, and it really speaks to how pervasive data is across all aspects of modern life. As of early September 2025, the crypto market is as dynamic and, dare I say, as chaotic as ever. We're seeing Bitcoin BTC hovering around $111,000, Ethereum, ETH at approximately $4,300, XRP around $2.80, and other notable players like BNB, SOL, DOGE, they continue to capture significant attention, each with their own market narratives. This snapshot reflects a market that's seen incredible highs, sudden lows, constantly reacting to both internal developments and external macroeconomic factors.
And it wouldn't be crypto without significant volatility, would it? We're seeing some pretty major market swings and trends right now. What's the general feeling out there?
Absolutely. Volatility remains a defining characteristic. Bitcoin recently retakes 111K as risk assets reverse off worst levels. That shows its sensitivity to broader market sentiment, how traditional risk-on assets like tech stocks are doing. It suggests that while crypto has its own internal dynamics, it's increasingly correlated with the wider global financial system. Meanwhile, XRP is consolidating below $3 as RSI and MACD signal potential breakout.
Okay, RSI and MACD. Those are technical indicators.
Yeah, exactly. Traders watch them closely for potential price movements. The RSI, Relative Strength Index, is kind of like a speedometer for price, tells you if an asset is overbought or oversold. And the MACD, Moving Average Convergence Divergence, helps identify changes in momentum and trends. When they signal a potential breakout like this, it suggests a significant price move up or down could be coming soon. Keeps traders on edge.
So a mix of cautious optimism maybe and potential for dramatic shifts. What's the general outlook traders are watching, especially considering seasonal trends?
Well, many are eyeing the historical trend, often called Red September risks, noting that Bitcoin risks sliding to $100 K after 6% monthly drop earlier in the month. September historically hasn't always been strong for crypto. It's a pattern. However, there's also the perspective, especially from long-term holders or HO dealers, that Bitcoin's path to $1 RMM may be very boring.
Boring. How so?
Suggesting a more gradual, less dramatic climb over time, driven by steady institutional adoption rather than just speculative frenzy. And for XRP, some analysts are forecasting a pretty ambitious cycle target of $20.
$20. That's a huge leap from $2.80.
Which would be a substantial increase, yeah. Driven by its potential utility in cross-border payments, that's the narrative there.
That's quite a range of predictions. Cautious to extremely bullish. Are the big players, the whales, those with massive holdings, making any notable moves that could signal broader trends?
They certainly are, and tracking their movements is a critical part of crypto analytics. We're observing shifts like whales rotate to ETH, indicating a strategic move of significant capital into Ethereum.
Why might they do that?
Well, it often signals belief in Ethereum's upcoming network upgrades, maybe more layer 2 scaling solutions coming online. Or it could be strategic diversification away from more volatile assets, betting on ETH's foundational role in DeFi, decentralized finance. Simultaneously, whales add nearly $960 worth of tokens to XRP, suggesting strong accumulation, maybe anticipating that breakout we mentioned. These large capital flows from institutional or high net worth investors, they're always a key indicator. Their moves can significantly impact market prices just because of the sheer volume.
And how are broader macroeconomic factors playing into this? Is crypto still its own separate universe, or are traditional markets having more impact?
Crypto is definitely increasingly influenced by macro factors. It's moving beyond that initial idea of being a completely uncorrelated asset. For instance, gold's rally has a big catalyst, and it could help Bitcoin too. Both are often seen as alternative stores of value or hedges against inflation, especially during economic uncertainty. When traditional investors seek safety in gold, some of that capital often flows into Bitcoin as well. There's an overlap in investor psychology there. The upcoming U.S. jobs report is also a critical data point, expected to influence Bitcoin's short-term stability. A stronger than expected jobs report could signal continued economic strength. That might lead the Federal Reserve to keep interest rates higher, which often dampens appetite for riskier assets like crypto. It just highlights the growing interconnectedness with traditional economic indicators, central bank policies.
Beyond individual price swings and whale watching, are we seeing more widespread institutional adoption, crypto assets moving into traditional financial frameworks?
Yes, definitely. And it's a really significant trend to watch. Institutional involvement is growing in several key ways. Gemini, the crypto exchange from the Winklevoss twins, has filed an S-1 for an IPO, an initial public offering. They're aiming for a $2.22b valuation and seeking to raise $370 million.
Going public, huh?
Yeah, it signifies a move towards traditional public markets for a major crypto player. Brings it under public company regulations, makes it accessible to a broader investor base through traditional brokerages. Furthermore, traditional finance giants like BlackRock are increasing their stake in companies like Freedom Holding Corp, which operates in brokerage and investment banking. It signals clear, growing interest in the digital asset space from these established investment firms that historically stayed on the sidelines. These moves suggest a mainstreaming of crypto as a legitimate asset class.
Now let's talk innovation. What are some of the most exciting emerging trends and advancements we're seeing in digital assets and the underlying blockchain tech? This space just never stands still, does it?
It truly doesn't. One of the most significant, potentially transformative areas is the rise of tokenized assets, often called real-world assets, or RWAs. We're seeing the launch of X stocks on Ethereum with 60 tokenized stocks, including NVIDIA and Tesla.
So, stocks in the blockchain.
Exactly. You own a digital representation of a traditional stock, but on a blockchain. This brings potential benefits like fractional ownership, buying just a small piece of an expensive share, 24/7 trading, increased transparency. Kraken, another big exchange, is also expanding its tokenized equities offering onto the Ethereum mainnet. And it's not just stocks. We're seeing tokenized gold enters U.S. IRAs in $1.6p smart gold Chintai rollout.
Gold in your retirement account, but tokenized.
Yeah, allowing investors to hold vaulted physical gold, but represented by tokens, in their self-directed individual retirement accounts, IRAs. It's like taking a physical asset, breaking it into digital shares, making it as easy to trade and manage as a stock, but backed by real audited gold. This innovation really blurs the lines between traditional and digital investments, makes illiquid assets more accessible, more efficient.
So we're talking real-world asset stocks, gold moving onto the blockchain. Is this a major development in terms of the scale of what blockchain could disrupt?
Oh, it's a massive expansion, a fundamental shift potentially. The trusted smart chain now operational, unlocking real-world asset potential that creates new possibilities for what can be tokenized. It refers to blockchain infrastructure specifically designed to securely, transparently link physical or traditional financial assets to their digital representations. And JuCoin has formed a $500 member joint venture with Connexa to establish an RWA exchange for real-world asset trading.
RWA, so AI is involved too.
Yeah, suggesting the integration of artificial intelligence, maybe to enhance liquidity, pricing, risk management for these tokenized assets. This is fundamentally changing how assets might be owned, traded, managed globally, offering greater transparency, liquidity, accessibility.
But with new tech often comes new scrutiny. Are regulators comfortable with these tokenized assets, especially when they represent traditional securities like stocks?
Not entirely without caution, no. And this is a major area of ongoing debate. The EU Markets Watchdog, ESMA, European Securities and Markets Authority has flagged investor misunderstanding as a potential controversy.
What are they worried about?
They're concerned retail investors might not fully grasp the underlying tech, the risks, the regulatory differences compared to just buying a stock through their normal broker. While they seem keen to support the technology's innovation potential, they stress the need for safeguards. It indicates this innovative space will continue to evolve under intense regulatory watch to protect consumers. That tension between innovation and regulation, it's a constant theme in crypto.
What about the underlying blockchain protocols themselves? Are they seeing significant advances beyond just tokenization, pushing the boundaries of what these networks can do?
Absolutely. The foundational layers are continuously evolving. Bitcoin's evolution continues with the Bitcoin token protocol BRC20, enabling EVM-style smart contracts with BRC 2.0.
Okay, what does that mean in plain English?
It represents a major technical leap for Bitcoin. It's massive because it allows Bitcoin, which traditionally has very limited scripting capabilities, to run more complex programmable applications. Similar to what Ethereum's virtual machine, the EVM, allows. This opens up entirely new possibilities for DeFi and other applications on the Bitcoin network itself, extending its utility beyond just being a store of value.
Interesting. And Ethereum. Still developing too.
Oh, yes. Ethereum's development cycle continues. There's the impending shutdown of Ethereum, the largest testnet Holsky after Fusaka fork, which marks progress towards future upgrades and testing. But there are also challenges, like Ethereum L2 Starknet suffering second mainnet outage in 2 months.
L2, layer 2.
Yeah, layer 2 solutions are off-chain scaling solutions, designed to speed up transactions and reduce costs on the main Ethereum blockchain. These outages just underscore the ongoing development, the scaling efforts required to make these networks robust and reliable enough for widespread adoption. It's still very much a work in progress.
And despite these scaling challenges, It sounds like big institutional players are still very interested in Ethereum and its ecosystem.
Very much so. The commitment to Ethereum is significant. The Ether machine is raising 654 mil ETH investment from blockchain's Jeffrey Burns, and they aim to control 5% of Ether's supply.
5%. That's a lot for one entity.
It is. Demonstrates long-term conviction in Ethereum's future. That kind of investment by a single entity could have a substantial impact on network governance, market stability. Simultaneously, Bitmine Immersion is boosting its Ether holdings to $8 a bence, similar confidence from a different institutional player. These moves show significant capital allocation, long-term investment in the Ethereum ecosystem, betting on its foundational role in the decentralized digital economy.
It seems like AI is woven into everything these days. How is it intersecting with blockchain and crypto? More than just market analysis.
The intersection is becoming increasingly powerful, multifaceted. For market insights, yes, traders are indeed using large language models like ChatGPT and Grok to predict altcoin pumps, read market sentiment from huge amounts of social media and news data. This provides faster context, sentiment, and strategic clarity. Gives traders an edge by rapidly synthesizing information that would take humans hours to process. But it goes beyond just software. There's a tangible push to merge blockchain features in consumer tech. Devices like Gaia Labs' AI smartphone and Solana's latest devices.
What did that look like? A blockchain phone?
Could mean, for instance, a phone where your digital identity, your assets, even app permissions are managed securely on a blockchain directly from the device. More user control, potentially more security, and even mobility is being tokenized. We see Avalanche, Toyota blockchain designing autonomous robo-taxi infrastructure by tokenizing mobility. Imagine your robo-taxi payments, route data, maybe even ownership shares in the taxi network, all managed transparently and securely on a blockchain.
And is traditional government showing any interest in using blockchain tech itself, moving beyond just regulating it?
Interestingly, yes. There's a growing recognition of blockchain's potential beyond just crypto. The U.S. government starts pushing economic data onto blockchains as proof of concept. That signals official interest in leveraging the technology. Potential for transparency, data integrity applications.
Like what kind of data?
Could involve maybe putting government spending data, procurement contracts, even statistical releases onto a public or permissioned blockchain to enhance accountability, reduce fraud, moving towards an on-chain truth for public records. It's still early stages, but it's a significant indicator of potential broader adoption down the line.
So with all this activity, volatile markets, institutional moves, cutting-edge innovations, how are investors and institutions making sense of this incredibly data-rich, fast-moving environment? What's the critical role of data analytics in crypto?
Oh, the role of data analytics in crypto. It cannot be overstated. It's the compass for navigating this complex space. Platforms like CryptoQuant, Glassnode, Sentiment, they're providing unparalleled insights into digital assets, especially for institutions, professional investors. They don't just dump raw data on you, they distill it into actionable insights. Derived from diverse, often proprietary data sources, gives users a significant informational advantage.
What kind of data are they actually analyzing to get these insights? Sounds like much more than just price charts.
You're absolutely right. They look at several layers of data. Firstly, on-chain metrics are crucial. Analyzing every transaction recorded on the blockchain itself, they aggregate investor behaviors as price moves from their cost basis, meaning they track the average price at which different groups of investors bought their coins. This helps identify if whales are accumulating or dumping, for example, by observing large movements of tokens into or out of exchanges or private wallets.
Okay, so tracking the money flow on the blockchain. What else?
Secondly, social metrics. Analyzing vast amounts of data from social media, forums, news outlets. To understand what people are talking about in crypto, provides sentiment charts, gauging the collective mood around an asset or the market. And finally, development and community metrics, offering a comprehensive view beyond just price, looking at developer activity on a project's GitHub repository, community engagement, project updates. It gives a holistic picture of a project's health, its potential for long-term growth.
And what kinds of advanced tools do these platforms offer to process all this incredibly granular, diverse information into something digestible?
They provide a sophisticated suite of advanced tools. Things like customizable dashboards, users can tailor their view of the market, a wide array of analytical tools for in-depth research, a high-performance API for rapid programmatic data access that's crucial for algorithmic trading, institutional research, and crucially, they use proprietary entity adjustment and clustering algorithms.
What do those do?
They help analyze market participant behavior with greater precision. They can differentiate between various types of investors, distinguish between, say, a miner, an exchange, an institutional whale, or a retail investor. Gives a much clearer picture of who is doing what. These platforms also offer extensive historical data, essential for backtesting trading strategies. Allows investors to see how their strategies would have performed under past market conditions. Draws on years of experience in pioneering crypto analytics.
Sounds like an essential toolkit for anyone serious about digital assets,
Yeah.
trader or long-term investor. But with all this innovation, all this money flowing in, there must be significant regulatory scrutiny. And unfortunately, security concerns that users need to be aware of, right?
Absolutely. The regulatory landscape is a significant, constantly evolving factor. We're expecting U.S. crypto policy as Congress comes back in session later this year. Market structure legislation is seen as a top priority. That aims to clarify which federal agencies, SEC, CFTC, will regulate different aspects of crypto, how tokens will be classified, securities, commodities, etc. That clarity is desperately needed. The CFTC, the Commodity Futures Trading Commission, for its part, is allowing crypto firms that left U.S. can open doors here as foreign boards of trade.
What does that mean?
It indicates a degree of flexibility, allowing international players to offer their services to U.S. clients under certain conditions, potentially making the U.S. a more attractive market for compliant foreign entities, rather than driving them away completely.
Is the regulatory approach consistent globally?
Right.
Or are different countries taking different paths?
Oh, not at all. There's clear global regulatory divergence, creates both opportunities and challenges. While the Western approach, particularly US and Europe, tends to regulate crypto and AI through extensive public debate, legislative processes, sometimes enforcement actions first, countries like Singapore are observed to innovate more actively. Singapore deploys live systems in hospitals and refines its crypto licensing through targeted enforcement.
So, more build first, regulate as you go.
Kind of. They seem to be experimenting with these technologies in real-world applications, even critical sectors, while simultaneously developing clear, albeit iterative, regulatory frameworks. This difference in approach could significantly shape where innovation and investment flourish globally. Some jurisdictions actively fostering growth, others prioritizing risk mitigation through more cautious regulation.
And what about the darker side? The security risks, the fraud schemes users need to be incredibly vigilant about.
Unfortunately, the risks are substantial, and they constantly evolve. Hackers are using the classic EIP 7702 exploit to snatch WLFI. That's a reference to a new token linked to the Trump project we might discuss. EIP 7702 is a proposed Ethereum improvement protocol. Exploits can arise even from new technical specs. The infamous Try My Game Discord scam is reportedly on the rise, often targeting younger users, maybe less tech-savvy folks, resulting in losses like a reported $170,000 in one instance.
How does that work?
Usually social engineering. A scammer convinces a user to click a malicious link or connect their crypto wallet to a fraudulent website disguised as a game. A Venus Protocol user suffers $13 on 5 cents loss from phishing attack, highlighting the sophistication. Attackers create fake websites, fake messages, tricking users into revealing their private keys or approving malicious transactions. And on a larger scale, the staggering estimate that Ukraine has lost at least $10 Bs to crypto crime underscores the scale of financial losses through cyber theft fraud in this space. Investor.dev gives crucial advice on red flags of fraud, like promises of high investment returns with little or no risk, or pressure to act now, both classic tactics used by crypto scammers. Diligence, skepticism, they're paramount.
And just to wrap up this section, it appears politics is even finding its way deep into the crypto space, especially with high-profile figures. Seems no corner of modern life is immune.
Indeed. We've seen several news items illustrating how politics, finance, digital assets are increasingly intersecting. There's news surrounding the Trump project floats token burning as WLFI dips 30% after launch. WLFI is the World Liberty Financial Initiative token. Token burning reduces supply, often aims to boost scarcity and value. There's also the report that the Trump family's World Liberty stakes surges to $5 after token unlock, referring to the release of previously locked tokens held by early investors or insiders. And then Trump Media, Crypto.com to build $6 4B CRO treasury firm, CRO being the native token of Crypto.com.
So direct partnerships, token projects.
Exactly. These examples demonstrate direct involvement of political figures, their associative entities, in the digital asset space. Creates new narratives, new market dynamics driven as much by political sentiment as by crypto fundamentals. California Governor Gavin Newsom even made a playful jab about a Trump corruption adoption coin, highlighting how these political forays into crypto become part of broader public discourse political rivalries.
So what does this all mean for us, the listeners? We've journeyed through incredibly diverse data landscapes today, from the World Bank's global economic figures reshaping our understanding of prosperity and poverty, to the critical shifts in public health data impacting our communities. And finally, the real-time flows of digital assets in the crypto world. It's been a lot to take in, but the connections are undeniable.
That's right. What we've seen is that whether it's the World Bank's diligent efforts to measure and alleviate poverty, or the critical importance of robust public health data in preventing devastating outbreaks, or the intricate web of on-chain data driving digital finance, information is undeniably power. It shapes our understanding, our ability to act, our collective sense of risk, and our opportunities.
And it really highlights the critical role of reliable data and the institutions that collect and interpret it. The health of our traditional institutions, the robustness of our data collection systems, the clarity of our communication. It directly impacts our collective ability to respond to global crises, foster economic development, build resilient communities. We've seen how the weakening of traditional public health institutions can have immediate tragic consequences.
Absolutely. And simultaneously, the digital frontier offers these new paradigms for transparency, value creation, often promising on-chain truth. It's a mutable, verifiable record of transactions, assets. But as we've discussed, it also introduces entirely new forms of risk, from sophisticated scams to regulatory uncertainties and a complexity that demands incredibly careful navigation. It's really a dual-edged sword.
Which brings us to a call for diligence and engagement for all of you listening. Whether you're a policymaker making crucial decisions that affect millions, or an investor navigating these volatile markets trying to build wealth, or simply a curious citizen trying to make sense of the world around you, understanding these data landscapes, questioning assumptions, actively engaging with reliable sources, it's more crucial now than ever before. The increasing complexity, the politicization of information, it demands our active participation. Seeking clarity, demanding accountability from both traditional and emerging institutions.
And this leads us to a final, maybe provocative thought for you to consider as you go about your day. How does the increasing fragmentation and politicization of traditional data sources, like our public health agencies, which we've seen experiencing brain drain, communication challenges, how does that contrast with the drive for transparency and on-chain truth that is a foundational promise of digital finance? What does this growing divergence mean for our collective ability to make truly informed decisions in the future? Do we embrace decentralized, immutable ledgers as the new source of truth? Or do we double down on rebuilding trust in our established, albeit sometimes fallible, institutions?
And, perhaps more importantly, what responsibilities do individuals and institutions have in navigating this evolving data landscape? How can we ensure that critical information actually serves the greater good, rather than creating further divides or dangerous blind spots in an already complex and increasingly polarized world? It's a lot to think about, a powerful challenge for our digital age, and certainly something worth a deeper dive on your own.